Hi, everybody. Welcome to the Market Update Desk, January 16th. We're actually going to rename this one the Kool-Aid Blue for the Detroit Lions. We had the first playoff win since 1993 and only the second since 1957. Man, it was a cool thing to see. In the matter of 6 days, we got a national championship for U of M and a home playoff win for the Detroit Lions. Man, never thought I would see the day again. Those things would happen, but pretty cool week with that stuff going on. Hope everybody survived the snow apocalypse over the last weekend. It was pretty rough out there shoveling and uncovering and unbearing from all the snow. So, with the markets closed yesterday for the holiday, we do start up a pretty active week as far as commentary. A little bit less in data, but much more in commentary this week. Today opened up the Davos World Economic Forum, and that is a big thing that happens within the economics world with comments and ideas that come out of that forum. The International Monetary Fund estimates that the U.S. economy has already seen about a 75% transmission of the monetary policy that's been in effect with a restriction, according to the deputy manager Gita uh, from the World Economic Forum, indicated that today. The euro area has still more to go because it started raising rates later than we did. Um, Francis Gulleroy, the governor of France central bank, said he believes the feed through from monetary policy decisions to financial conditions was more or less over in the Eurozone. So we do see some calming maybe over in Europe, maybe slowing down of inflation, which has been a little bit harder than here domestically because they started their restrictive policy a little bit later than we did, and not to the extent that we did either. So the U.S. economy has maintained stronger growth than what was originally expected since interest rates began rising in 22, though several strategists have spoken of the potential recession this year. The IMF's deputy manager, um, Gita, indicated the Eurozone economy, meanwhile, has fallen into stagnation. The European Central Bank began hiking in 22. Labor markets are slowing, but at a much more gradual pace, which is why the IMF thinks that the soft landing scenario, the probabilities have come up quite a bit because inflation has come down without needing that much of a loss in terms of economic activity. So a lot of what's being talked today is Europe focused in Davos with what the central banks have been doing over there. This week, we do get a good amount of commentary still coming out. Investors are looking ahead tomorrow at retail sales. Also, we get a whole big tranche of Fed speakers coming out this week. Tomorrow, we've got Fed member Barr and Bowman and Williams speak. Thursday, we have members Bostic speak and jobless claims and new housing starts. Friday's consumer sentiment and existing home sales, and Fed member Barr and Daly speak also at the end of the week. So there's less technicals coming out this week and more commentary. So today we did have one of the Fed members speak earlier today. Took the markets down a little bit. The 10-year bond is up about 10 basis points, up to about 4.08. So we've been having some retreating in that market. Mortgage-backed securities are down a little bit, so rates are being pressured. Now, some of it is in preparation for next week when we get CPI. So this could be a little bit of an up and down week, especially based on the commentary coming out, not just from United States Fed members, but also from international central bank presidents and members. So there's a lot to pay attention to. We'll keep you up to date. Give us a call with any questions. Get pre approved, 616 293 2189. Take care.